So a lot of consumers already feel that they have access to instant payments with apps like Venmo or Zelle, but in reality, the bank doesn't actually transfer the money in real time. Can you talk about the risks for banks when it comes to using or relying on those old tools and how FedNow is changing the underlying plumbing?
Yeah, I think it's a good question and one that I get often. So I think it's true that many popular payment applications and services do allow individuals and businesses to quickly and easily send and receive payments. However, some require users to hold balances in an application rather than sending and receiving money directly from their bank account. Others allow users to send funds from their bank account, with the funds being instantly available to the recipient, but the money moves between banks on a delay basis, and that introduces settlement risk to the banks. And if you think about high volume, in a high volume of payments type of scenario, you can see how that risk could grow. And maybe also many popular payment apps are mostly for people paying each other. Whereas in coming to FedNow, FedNow can be used for all payment types, including between businesses, between a consumer and a business, and is truly use case agnostic. And I think that's important because modern commerce requires instant payments, money movement, right? So, and when we talk about FedNow, and we see it every day in all aspects of our lives, people want instant everything. So, I think FedNow is unique in that transactions occur directly between bank accounts and they're complete in a matter of seconds. So that kind of clearing and settlement happening instantly. There's no credit or settlement risk between financial institutions. And also, the payments are finally irrevocable. So the recipient of the payment can, you know, pay a supplier, can release the goods to from a vendor. They're data rich, so there is information such as invoices that travels with the payment. So it facilitates really smooth transactions. And 24/7, 365, right? So funds are available to beneficiaries in seconds.
And you mentioned fraud there. So one thing that I keep hearing is that the industry feels that faster payments equals faster fraud. What's your response to institutions that view fraud as one reason why they shouldn't be adopting FedNow?
Yeah, so I think in the early days we heard uh, a lot of the faster payments equal faster fraud, and I think, look, I think it's catchy, but also not correct. What we've seen looking at worldwide data is that scams can be performed outside of the payment choice, outside of the payment rails, and that any rail can then be used to move the rewards of that fraud. So it's not just about instant payments. And frankly, I heard it said in some cases to justify delay adoption or to justify competing priorities. Now, all of that said, we are very conscious of providing risk mitigants as part of the service, and we have strong commitment to adding features and functionality that allows participants to have that control regarding how they use the FedNow service. And that's not new. From the very beginning, we built FedNow with tools and functionality to help protect the participants, and we added since we went live 2.5 years ago. We added additional tools and functionality. In fact, we are now testing a smart new feature called a network intelligence tool. And you can think about it as a quick background check for payments. It lets the banks do a pre check on the receiving account before sending money. And this will work with other tools that the bank have to helping them to make sure that everything is in order with the payments before they send that. And I think over time, we will gonna keep evolving the set of tools, and also we're gonna continue to work with participants to see what makes the most sense for them to help them manage their risk of fraud.
And I guess banks will like the idea of less risk that will save them money. But what do you say to those people that say that FedNow can cannibalize ACH or wire revenues, or can it facilitate something new altogether?
Yeah, I think it's the latter. I think it's truly a misconception that the FedNow service was introduced as a substitution of for other payments types. Actually, what we see are a lot of new use cases. Um, we see auto loans during the weekend. We see insurance disbursements during the weekends and holidays, or during the night. We see earned wage access, and I think we those are just some examples. I think we're going to see more over time. So I imagine that the total size of overall payments and transactions are going to continue to grow over time, especially as the industry develops new use cases to solve pain points. And that's what we're there for. FedNow is there to provide more options for this innovative use cases, for innovative services, alongside with established services. But when you think about it, 24/7, always on, immediate availability of funds, and finality of settlement, when you put all these characteristics together, for businesses as well as for individuals, I think using instant payments just gives them more flexibility to manage cash flows and also strengthen relationships with vendors and clients, even on the weekends or during the holidays.
And I guess thinking about adoption, obviously more and more banks are signing up, but perhaps banks aren't in a rush because customers aren't coming forth saying, we need this. Is there a risk in waiting for direct request, or do you see customers sort of switching to other competitors without complaining if banks aren't providing this facility? How do you think about that?
Well, I think that we live in a time defined by immediacy, whether it is accessing information, streaming a movie, same day shipping for holiday shopping, or making payments. I think that the expectations from consumers and businesses is quite clear. We don't like to wait. We want it, whatever it is, what we want it now. And companies compete on speed. They compete on lack of friction. And when we look, we regularly perform surveys. The Federal Reserve does looks at doing research of consumers and business habits. And what we found is that 78% of consumers who prefer faster payments, they consider them essential, not optional, but essentials. And then 6 in 10 want their financial institutions to offer instant options. Uh, there's also a generational shift towards immediacy as well. And you might expect that. So for Gen Z, for example, the importance of faster payments rose 14% year over year. So coming back to your question, consumers may not be asking their financial institution for instant payments, but they are voting with their feet and looking elsewhere. And banks that have yet to adopt the FinOut service may already feeling that impact, whether they know it or not, in terms of the root cause. So, and I think it's not all about the consumers, right? It's also about the businesses. The demand of for speed and convenience is it's a trend that affects everybody, and I think it's going to reshape how industry operates, how consumers engage, and how real value is delivered.
So the US market is a little bit special than some other regions that perhaps are mandating banks to
Right.
adopt bank-to-bank transfer. Here in the US, obviously, you're relying on market forces and the banks themselves signing up. And you mentioned you had over 1,500 onboarded already. How close are you to a tipping point for this to become a ubiquitous service that everyone is offering?
Yeah, I think you said it right. 2.5 years ago, the Federal Reserve launched the FedNow service, and not as a top-down mandate, but as a direct response to what the industry itself was asking for. FinNow was created for the greater good. It was as a means for all financial institutions, regardless of size, to offer instant payments, to be able to offer instant payments to their customers, consumers, or businesses. So in the US, adoption is not instant like other countries, but certainly adoption is not slow. We are seeing a lot of momentum in the market. As you mentioned, we started with 35 financial institutions when we launched 2.5 years ago, and we are now at close to 1,600 financial institutions in less than 2.5 years. And we're seeing good growth there from core processors, fintech, service providers. That's accelerating the onboarding. In fact, our record for onboarding right now is 5 days. So think about that: 5 days between signing the contract and being live on the FedNow service. So a lot is possible, and I think as more participants get engaged with the service, then what we're going to see is that the value proposition for FedNow is going to increase, and we're going to start seeing that that flywheel effect. So it's not going to be just about the strategic value of instant payments, but ultimately it's just going to be it's just going to make a lot of business case, and those institutions that are not adopting, they're going to feel the pain. They're going to fall behind to their competitors in the marketplace. But there's a lot of value to be captured here with instant payments.
And so far, we talked about the private sector, how consumers or businesses could benefit from working with a bank that offers this. Do you have other examples, maybe government or elsewhere even, where they also benefit from adopting this?
Yeah, I think perhaps one of the most exciting use cases developed this year has been happening in the government space. U.S. Treasury's Bureau of Fiscal Service recently announced that it had added the FedNow service for instant disbursements for federal agencies, including FEMA, as part of the digital payout program. And I think this is a game changer, especially in disaster or emergency situations where speed of money really matters to the recipient. FedNow is going to bring the immediacy of money movement to people that need it the most, and I think that's just the beginning, right? So imagine after a hurricane or other natural disaster, instead of waiting for a check to clear, you can have access to your funds to buy food or rebuild a house or whatever the case might be. There's a lot of value in instant for both, I think, state and federal agencies. And we're going to continue to work with them to explore those use cases and to grow them over time.
Nick, thank you very much. That was super informative. I'm excited to see what's next for FedNow.
Thank you, Krister. Thank you for having me.